Hey everybody, I'm Chris Wilms, one of the partners at Hopler, Wilms, and Hanna. So because of this pandemic and the economic climate, interest rates have gone way down. And so a lot of people are right now taking advantage of those low rates if they have the means and the ability to refinance or get equity lines with their home, basically take advantage of these low interest rates because money's cheap right now. And so I am getting a lot of calls. And so I wanted to talk to you about homes that are tied up in a trust. When somebody dies, a lot of times the real estate, and this part's not really intuitive, but real estate gets tied up sometimes. A lot of times the probate assets aren't allowed to be used to maintain the home. So the utilities, the insurance, the taxes, the HOA dues, the utilities, all of that gets managed by usually just family. They all usually are scrambling to try to keep those costs maintained while you're working towards getting the probate process to a point where you can actually use that money to maintain the property. This means that a lot of times people's assets are tied up for a period of time, so we can't repair the property to get it ready to sell. And basically there's a lot of delay that happens just by the natural process of dealing with someone's assets after they die. So to mitigate that, a lot of times when we do an estate plan for someone, or when someone designs an estate plan, they will design a trust, and they'll put their home in the trust. And the net effect of this is that it makes things a lot faster. So when someone dies, it's already owned by the trust, so it's not tied up in the probate process. Usually the trust has other liquid assets in it, so the next trustee that's assigned to come in, they can come in the very next day after someone dies, and they can start getting the property ready for sale. They can continue to maintain the property, pay someone to cut the yard. There's just a seamless transition from one trustee to the next. And then when the property is ready to sell, there's no delay in title history or anything like that in terms of making sure that the estate's at a point where the real estate can be sold without there being a title defect. So essentially, it's a very easy tool to implement, but when you go to refinance or you apply for a loan, or you try to take advantage of that equity that you have in your home, that's where sometimes people run into a little bit of a hiccup. Some banks and financial institutions just aren't hip to the idea of having homes in a trust when they're giving you money. And so what they'll do is they'll insist that you take your home out of the trust and put it back in your individual names, at least while the financing is going on, the underwriting is going on. And then when you're done, you deed the property back into the trust. So we get a lot of calls about this whenever interest rates go down. They'll say, Chris, you put my trust in a home, or put my home in a trust, a couple of years ago. I want to refinance. They're telling me the trust can't own it. What do I do? We'll do a simple deed from the trust to the individual owners, let you get through the underwriting, and then we'll do a deed back from the individual owners to the trust. This little hiccup is not something that's uniform. So a lot of banks and financial institutions don't care if your home is owned by a trust, but some do. And so if you're dead set on working with the individual company that you've started with, and you want to work with them, and you've got the best rate with them, and you're comfortable with them, that's fine. It's not a deterrent necessarily to using a particular company. It's just that we have an extra step we need to do. And so our firm does this regularly. So it's something we have pretty streamlined. So we charge low fees for it. We can do both transactions, putting it out of the trust and then putting it back into the trust. And we have a very quick turnaround time. So I understand you want to probably take advantage of these rates while they're low. You probably don't want this to linger for a while. So it's not going to be one of these things that takes weeks. It might take a day. So definitely reach out to us if you're facing that issue. You're trying to take advantage of mortgage rates or interest rates, and you'd like to get your home out of the trust temporarily just for the purpose of financing and then putting it back in. I know it sounds really convoluted, but it actually is a very normal thing to do during a time like this. The other thing I will say is, if you are new to this estate planning tool, it actually, despite the hiccups that are caused when you want to refinance, it actually is a very effective, very simple tool to implement to put your home in a trust. We do it routinely several times a week for clients. So I would definitely suggest, if you haven't done this and you want a seamless transition after you pass away, especially if you're concerned about your family's ability to manage or maintain real property for a period of time until it can be sold or dealt with otherwise, then a trust might be a solution for you. And having your home in the trust, it's definitely going to make things a lot easier when your family passes away, or when you pass away rather. So if you have any questions about that, definitely reach out. We are available. We are open during this pandemic, and we're happy to help you get this done with a quick turnaround time and low fees.